Hi, everyone. This is day 577 of my velocity banking journey. My name is Willie Green. I'm a political economist. And one of the things I've been doing is trying to utilize velocity banking in my life. And we'll give you a quick update of where I am and where I started from in 2024. So if you can see my screen, you can see that velocity banking, hopefully what you get from here is how to use a line of credit, home equity to improve my credit and what velocity banking means for me in the real world as a political economist. What is velocity banking? Velocity banking is a method of using a line of credit as a strategy to reduce debt or build wealth within a capitalist and democratic society such as the U.S. using and leveraging debt. This is something that we historically have not been taught in school. So in January of 2024, I had $155,000 in student loan debt, $25,000 in personal debt, $14,000 in business debt. I had three mortgages, one at 6%, one at 6.88%, and one at 3.75%, totaling 143. As of December, I've eliminated the student loan to the student loan program. My personal debt of $25,000 has been eliminated. The business debt of $14,000 that remains, and I think it's under $15,000. I'm now charging everything on the business side. My personal credit cards are zero, and I just use them to charge candy bars or something like that at Dollar Tree just to keep the credit going. In terms of the mortgages, I've replaced the $35,000 mortgage. I've replaced the $28,000 mortgage with a $50,000 HELOC and $106,000 HELOC that currently sits at $48,000. I currently still have the mortgage at $51,955, down from $79,000. Velocity banking, here's a kind of flow chart of how it's done traditional versus velocity banking. Taking a paycheck, put it in the paycheck, put it in the bank, paying a debt, and what you have is what you have. Now I'm doing a HELOC, and I also supplement that with credit, and whatever is left goes back to the HELOC. This is what I've come to look at as the pre-frugal velocity banking. I used to get my paycheck, put it into a bank or credit union, pay my expenses, pay my debts, and whatever was left stayed in the bank. That was my pre-velocity banking. Now I have my paycheck. I take my investments, put them in a bank or a credit union, and then there's four types of lines of credit, but I'm only using a HELOC and a credit card to then pay the expenses, to then pay the monthly debts, and whatever left recycles through the bank back into the HELOC because my HELOC is not with one particular company. So I have the home equity line of credit that's sitting over here, and that's with a vendor and a holder. But then the credit card and everything else is over here separately. So I'm trying to get a HELOC that has it all in one. Still working on that. So as of today, as I mentioned early, this is how in the post HELOC world I have. Once I get my check, my investment goes to the credit union, goes into a HELOC, and I try to pay all my bills from one single credit card that allows me to use checks also to pull in my mortgages and my rents. And then I also have my monthly expenses and daily expenses. That's on the credit bureau. As of now, my credit score is 810. I was at 690 before velocity banking. Also getting some promo cards. And these are just when I was using cash advance, convenience check in general. All right, the next steps, I just wanted to go through velocity banking with you very quickly. If you're interested in working with me and my team, that we can help you with velocity banking and also help you with some of the games, please use my contact information. Give me a call, give me an email. Love to work with you and your family. Have a great day. Bye-bye, everyone.